This is an interesting data point. It's months of supply. It's also known as absorption rate. And this is really indicative of demand, actually. So it's looking at any one given time, how long will it take the buyers to absorb all the property in the market? And you can see, this is 2015, 2016, we are in that 4-month range. Anything less than 6 months is considered a seller's market. 6 months is considered an even market, and over than 6 months, longer than 6 months, is considered a buyer's market. So we're still in seller's market, kind of going towards even. And then during COVID, the absorption rate just went really down, and particularly in the greater Boston suburbs, or really for single family homes, because people wanted outdoor space. They wanted an extra room for their office. If you had just moved into this awesome loft apartment where everything was wide open, you probably might be, pulling your hair out if you had roommates. And so we saw this really big increase in demand and then a decrease in supply, which really made the properties just jump off the market, just jump off the shelf. So what does it feel like now when you're in the market? Well, it's interesting. So prices have gone down and they're stabilizing a little bit. I think they're moving towards stabilization. The inventory is still so low. And although I'll have a caveat that I had a lot of alerts today on new listings. So that's a really good sign. We're starting to, the spring market felt a little delayed because usually we see a little bit more in February. So that's a good sign, but still the inventory for the beginning of March still feels really, really low. So properties moving really quickly. We're still seeing offer deadlines. That means, let's say the property comes out on Monday, they might defer showings until the open house, but they'll hold all offers until Monday, the following Monday. And that's when we anticipate, there's a bidding war, there's going to be a lot of demand, and we have to compete for the property. So we're still seeing that, particularly in entry level price point of whatever area you're looking for, and any property that's priced well. We're seeing it move really quickly. Now, here is where we were in the COVID time period. And last year, you see that we were 15 days on the market. And we've gone up. This was the second half of last year. We've gone up, and then we came down a little bit because the inventory really went down. So again, I suspect that very slowly but surely, we're going to be moving towards longer days on the market. But some property that is going to be, again, entry-level price point is going to move still really quickly. Now, here's percent closed above listing price. So here we are last year and the year before, people were offering hundreds of thousands over asking. I had a client offer $456,000 over asking on a property. Now this was, and they would admit it, they had family living in that neighborhood, so they had to be there. They also were coming from San Francisco, so everything felt cheap to them. And not everyone did that. I actually had someone get a property 100,000 under asking. So everything is really based on the property. Not to digress too much, but someone had asked a question, where are the hot markets? Where can you get deals? And I would say it's really based on the property. Any property that's been on the market for a longer period of time, that's where you have more buying power. But I don't want to digress too much. So how much are we going over asking? Well, we are not going in the 70% and over. We're still in that 20 to 30%. So we are still seeing property go over asking. It's not as high as we were seeing before. So here's just some general themes. So what are we seeing? So first of all, believe it or not, maybe this is disappointing, but prices have already corrected. I know it doesn't necessarily, it still feels really expensive because rates are high. And my suspicion is that because of the lack of inventory, we're going to see them move towards stabilization, with property moving really quickly that's priced right, or is at that entry level price point. So to my people who are considering selling, maybe those downsizers out there, price is really important. This is not, there's really no market to do that, but maybe you could have done this last year or the year before. This is not the market to test a number, or to hope that buyers will negotiate down if you start high. Buyers are still, they're still conditioned that property will move quickly and go over asking. I think we'll need more time and more equalization in the market for that to change. So right now, pricing right on market is really important. So the market still feels competitive. We're probably, again, moving towards equalization, but it's always going to lean towards a seller's market. But good news, we're seeing contingencies come into play. We're seeing home inspections, financing contingencies, those coming back into play again. Not that you couldn't buy a house without it last year, but it was very difficult in these multiple offer situations if someone was going to waive everything. That's tough to compete with. So luckily, we're seeing those contingencies come into play. And if you feel that you want to wait it out until rates go down, you might be waiting for a very long time, and the market might have gone up at that point too.